Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video we'll be taking a look at three stocks: Maruti Suzuki, Reliance and ITC. Apart from that, I'll give my general overview of the market right now instead of covering the news. Which is said this week the only thing which is going to really affect our market is the US GDP data, which is going to come out on March 27th. So it is in the middle of the week and it should not right now really worry us until we reach that point. It's not even in the middle, the latter part of the week. Now, coming to the Nifty, Banknifty and Sensex. Now, when I look at the three indexes, I see, especially on the social media, a lot of positivity being put around that, oh, now we're going to have a wonderful recovery and everything. I don't think that is the case. This is as if you take a look at the fall, the Nifty, Banknifty, Sensex, or the stocks, large cap, small cap, mid cap have had in the past 6 months, and compare the recovery attempt seen in the past 2 weeks, the recovery is basically insignificant. For example, anyone who made the mistake of holding stocks in the past 6 months, their portfolio will be down minimum 30 to 40%, right? So now, if you see the performance of the portfolio the past 2 weeks, out of the 30 to 40% decline, they may have gained back only 2 to 3%. So they're still down 27 to 37%. So that is not even a significant dead cat bounce. It is simply a breather. Now, when I look at the Nifty 50 stocks, as of now, at the current position they're in, let's say Reliance and others, they're a position at which if they break the current resistance, they can have a small up move more, and then they will be start correcting again. So I see the same for the Nifty, Banknifty and Sensex. If they break the current resistance levels nearby, then they can rise slightly further, after which they will end up coming back down. So that's how I look at the whole thing. Might be wrong, but so the market will tell what really is the picture. So that's it for the Nifty, Banknifty, Sensex. Now let's take a quick look at the stocks which are going to be covered. Now coming to stocks which are going to be covered, the first one I'm covering is Maruti Suzuki. Now I had covered Maruti I think 2 weeks back, and when I covered it I had said that provided it is, I've not had to update any levels. I said as long as it's below 11,840, it's not going to be able to have a takeoff. And that's exactly what has happened. If you see that the stock has spent the whole time between 11,840 and the support I had drawn that time 11,454, and it's not been able to go anywhere. So my analysis of Maruti Suzuki stays the same. That okay, the guys who sold C's above this and P's below this after seeing my video, they'll have made good money. But according to me now, if you don't hold a position, I don't think it's wise now to enter a C and P sell position, because this box range will continue a bit more, but we're going to be getting a decision pretty soon whether it's going to break 11,840 or 11,454. So my trading plan is simple. I am going to wait. If it breaks 11,840, then I will not go long in it, simply because there is this resistance of moving average here, the 200-day moving average resistance, 50-day moving average resistance, then my quant level resistance. So there's a lot of resistance. So going long in Maruti will be sort of taking, if you can reach from point A to point B in a 5-kilometer journey, but you choose to go a 30-kilometer round journey. So it will be doing that to your money. What I'll wait for is, if it manages to rise, wait for some weakness to take a shot back to 11,454, and if that breaks, then 11,220, 10,950 and 10,700. So overall my bearish view on Maruti is still present, and that view is not going to change until we come back above 12,450 rupees. As long as we're below that, I am still going to be a bear on Maruti, and I'm going to wait for this range to break. If by chance it breaks the top, then I'll just let it go up a bit and then start selling calls in it and start doing intraday shorting also in it, or overnight shorting via option buys. That's how I look at the picture. Now next we'll take a look at Reliance. Just a second. Now when we take a look at Reliance again, this is one I had covered. So due to that, I've kept the levels roughly the same on the upside. For example, in my last video on Reliance, if you check it out, I had given an upside target of 1280. I have maintained that upside as we have reached the target, and I had covered it roughly when Reliance was at this point. Now, we have reached 1280. Now, according to me, as I said, a lot of Nifty 50 stocks are at a point where they can have a small up move and then it's party over. Similarly, if you look at Reliance, by chance it breaks 12 to 1280, then I see it going okay to 1300, then it will start trying to make its way down. Even if it breaks 1300, I don't think it will be able to do the full journey to 1340. It may go a bit above 1300, let's say to 1320, and then start the journey back down. Why I'm saying that is right now, if you look at Reliance Industries, for example, there's a lot of resistance coming in. There's this quant resistance level. There's a candle resistance there. There's a candle resistance there. There's a candle resistance there, and a candle resistance there. So it's going into a lot of resistance. So and going up long in it is going. I would call it a dumb decision. So I will personally, what I will be waiting for is let it rise to 1300. If it can, then wait for some weakness in the trend catcher. Basically, I'll wait for the trend catcher, the black line, to come back below the red. As soon as that crossover happens, even if there is a bullish candle on the chart, it most likely will end up in a box range at that point. So I will end up selling calls above that point. So that's how I look at it. Then once it forms the natural top and shows the price action going down and the volume support comes in, then it's even an option buy short. So Reliance, again, I'm looking similar, a bit of a rise and then a dip to the downside. So that's it for Reliance. Now let's take a quick look at ITC. Now when I take a look at ITC, how I see ITC, that as long as it is between 417 and 400, this is going nowhere. It's sort of like Maruti. Maruti, when I covered it, I think 2 weeks back, when I said that it's going to go nowhere, this range, most must have thought I'm nuts. And as I remember, even there were a few comments, I think, which had come on stock tweets that this guy he's got his analysis completely wrong. And we can see Maruti's results later on, as anyone who went long or short in it via option buys would have lost money. Equity would have been also lost money and got frustrated. Option sellers who sold the range are the only ones who have made some money, like I had said in that video. So ITC, I see the same pattern again. As long as it is between 400 and 417, this stock is going nowhere. Even if it rises to 417, and it breaks above it, then that is only when I would recommend in long to 430 to 435, but not via equity, via option sells, PE sells basically. Why I'm not saying to go via long via equity or option buying in ITC, if it breaks this by chance, this resistance is here and this resistance is not far. So it will be a very slow move. So that will be better for option selling rather than equity buying or option buying. On the other hand, if it breaks 400, then clean short to 385. Now ITC is the only stock where I'm not holding a clean bias like Reliance and Maruti. I'm waiting for them to go to the resistance level which I mentioned, and then I'm going to short. ITC, I'm not going to be that aggressive in option buying, for example. This is purely an option selling stock. Even if it falls, as every move will be, let's say it might give one day of a good fall, and the next days will be tiny candles, which will be deadly for option buying, but great for option selling. So again, a recap of the video as a whole. When I take a look at the markets, according to me, Reliance is got a leg up to go to 1300 to 1320, for example, and then it's a clean short via C sells, and then once it forms a candle, also short via P buys. When we take a look at Maruti Suzuki, it is staying in that range. Now I don't think is the time to sell the range, because number one, we are very close to monthly expiry, and I don't think you should go to next month's expiry and sell. And so give it that time to sort of decide and then take the trade then. ITC is option seller stock, not an equity buyer or an option buyer, as the moves are going to be slow. Equity buyer can only go up. So the up move, if it happens, will be dreadfully slow. So it's not worth it. So that's my view for all three. If you liked the video, then hit that like button, subscribe to the channel, and also click the notification bell. Thank you.